Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. If you've been following us, we've been doing a series on cryptocurrencies. We started out with part one talking about, what are cryptocurrencies, and then we talked about, how they came around, the history of those. In part two, we talked about, what you can do with cryptocurrency, whether you're going to buy things with it, if you're going to invest in it, and how to store, your cryptocurrency. Well, today, I thought we'd talk a little bit about, the impact of these things on regulations, specifically on taxes. In terms of taxation, cryptocurrencies are treated very differently from country to country. Now, in the U.S., the Internal Revenue Service ruled that Bitcoins and other digital currencies are to be taxed as property, not currency. So what do I mean by that? So what they would say is it looks more like a stock or a bond. So if you buy, let's just say you buy a Bitcoin, and let's say you pay $1,000 for a Bitcoin, and then you transfer that Bitcoin or you exchange that Bitcoin for something else. Well, then whatever you buy is going to have a value, and the difference between the value of the Bitcoin, what you paid for it, and what you sell it for is therefore a capital gain. So instead of it being income subject to, normal tax rates, these things become, long-term gains and losses taxed at a capital gain rate. So it could be a potentially much lower tax rate than that. So you just need to understand it with these cryptocurrencies. It really depends on the jurisdiction where you're operating, whether you're going to pay tax on these items. Now, one of the other areas that's interesting about, these cryptocurrencies is the term miner, okay? Or the mine. Miners are the single most important part of any cryptocurrency network, and much like a trading, mining is an investment. Now, I got to be honest with you. This kind of lost me, but we're going to go through it and see if we can't figure it out together. So essentially what miners are doing, they're providing a bookkeeping service for their respective communities. They contribute their computing power to solve complicated cryptographic puzzles, which is necessary to confirm a transaction and record it in a distributed public ledger called the blockchain. We talked about that a little bit before. One of the most interesting things about mining is that the difficulty of the puzzles is constantly increasing, correlating with the number of people trying to solve it. So what this basically means is as the particular cryptocurrency gets more, known and gets more out there, the more popular a certain cryptocurrency becomes, the more people try to mine it, the more difficult the process becomes. Now, one of the things that mentions here in this article that I've referenced before, a lot of people have made fortunes by mining Bitcoin. Back in the days, you could make substantial profits from mining using just your computer or even a powerful laptop. These days, Bitcoin mining can only become profitable if you're willing to invest in an industrial-grade mining hardware. This, of course, incurs huge electricity bills on top of the price of all necessary equipment. So this is something that you got to have a lot of computing power to do, apparently. Some of the other cryptocurrencies like Litecoins, Doggy coins, and Feather coins are said to be the best cryptocurrency in terms of being the cost-effective for the beginning. For instance, at the current value of Litecoins, you might earn anything from 50 cents to $10 using only consumer-grade hardware. So what they mean by that is that if you wanted to be one of these miners, you could earn, 50 cents to $10 a day using your basic computer that's sitting on your desk at home. But so how do miners make profits? Well, this is where I got a little bit more confused. But the more computing power they manage to accumulate, the more chance they have of solving the cryptographic puzzles. Once a miner manages to solve the puzzle, they receive a reward as well as a transaction fee. So basically, they're solving these puzzles with the idea of earning a reward. As the cryptocurrency attracts more interest, mining becomes harder and the amount of coins received as a reward decreases. For example, when Bitcoin was first created, the reward for successful mining was 50 Bitcoin. Now the reward stands at 12.5 Bitcoins. And this happens because the Bitcoin network is designed so that there only can be a total of 21 million coins in circulation. So they've got what we call a market cap. So there's only going to be a total of 21 million coins in circulation. Now, when this article was written, as of November 2017, almost 10 million Bitcoins have been mined and distributed. So, however, as the rewards are going to become smaller and smaller, every single Bitcoin mine will become exponentially more and more value. And that's why these Bitcoins and these cryptocurrencies, make mining cryptocurrencies an extremely competitive arms race that rewards early adopters. Now, depending upon where you live, profits made from mining can be subject to taxation and money transmitting regulations. We talked about the IRS side of this. In the U.S., the FinCEN has issued a guidance according to which mining of cryptocurrencies and exchanging them for fiat currencies may be considered money transmitting. That means that miners might need to comply with special laws and regulations dealing with these type of activities. Now, what they're basically saying is, and I think what they're alluding to here is that basically, if you're one of these miners, you may very well be a, sort of like an investment house. So you need to be really careful, if you're going to get into that mining, what you're going to get involved in. So it's important to make sure that you understand the legalities of the particular area where you're working so that you don't get yourself in trouble if you're going to be one of these miners. Now, I haven't given you enough information to really talk about the whole mining process. And frankly, I don't really know that I understand it, but I thought it was important to at least discuss the idea, what is a miner and how does that work, so that when you're hearing about these type of things in the news, you'll understand what they're talking about. Now, so let's say that, we've talked about, what created the cryptocurrencies and that sort of thing. And the next really thing to talk about is, well, what if you own a business and you want to accept this cryptocurrency for your business? Now, if you're looking to attract new customers, accepting cryptocurrency as a form of payment may be a solution for you. Now, this is becoming more and more increasing, in commonness, because like I said, when Apple said, hey, we're going to accept these 20 cryptocurrencies for handling transactions, they basically said, hey, we're going to consider this a new medium of exchange, something that we rely on. Now, one of the things they mentioned in this article is the thing called Coin ATM Radar, which currently lists almost 1,800 ATMs in 58 countries where you can handle doing this, these cryptocurrencies and exchanging those. Now, so if you're going to offer it for your business, the first thing you need to know is let your customers know that your business accepts crypto coins. And this is kind of basic, but you can, make it known by simply putting up a sign that says, hey, we accept crypto currency. Now you're going to list which ones you accept because not everybody's going to take them all. And then it's real simple. It's kind of like taking a credit card. The payments can then be accepted using hardware terminals, touchscreen apps, or simple wallet addresses through QR codes. QR codes basically a picture of a key, of a code, and you take a picture of that with your phone or your computer and it transmits some information. Now, Coin Payments currently accepts over 75 different digital currencies, charging just 0.5% commission per transaction. Other popular services including Kryptonator, CoinGate, and BitPay, with the latter only accepting Bitcoins. Now, think about that in terms of if you're a business, compare that with the cost of taking credit cards. For example, I know the Square network is a credit card processor, and I know they charge 3% per transaction. Well, this is basically saying that they're only charging 0.5% commission per transaction. So if you're a business owner and you're interested in this, you could definitely, save your business a lot of money by taking these type of payments. Now, the question is this really going to continue to grow? And, are we going to have, this means of moving this thing forward? Now, in the next section, we'll talk about the legalities of cryptocurrency.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.